Meridian Equity Partners. Jonathan, thanks very much indeed for joining us as ever. What is your feeling?
Andrew, good afternoon.
Do investors just feel burned by tech? They don't want to touch it right now?
Listen, we've had a pretty significant run up in tech since mid-year of 2023, kind of coming off that COVID hangover. So when we get to see activity in the market right now, where obviously the sentiment is turning low and the confidence is not there, investors kind of look at their portfolios and say, all right, where have I performed the best? Let me start to take some profits off the table, either short-term or long-term, and try to free up some capital and try to protect on this downside here. So we do see that in tech, and it's not just now. Anytime we see a shift in the market, we see a rotation out of tech, and it kind of comes back into some of the safeties, energies, financials, real estate. And we've seen that happen now. I'm sure once the dust settles with our geopolitical issues and our tariff conversations, we'll start to see that rotation back again.
That's the interesting. Do you think there's pent-up buying that would like to get back into these tech names? Because after all, a lot of these companies are growing really fast.
Right. So you put fundamentals aside and just kind of look at the stock price numbers, right? Clearly, we've had pressure on our markets. All sectors across the board have had significant selling into them, albeit measured and somewhat in a non-panic mode, but we still see pressure coming into this market here. You look at some of these prices in the Mag 7s and you've got stocks that are down 12, 18, 20 plus %. At some point, the smart money is going to come in and start buying these. They loved Amazon when it was trading at 220. They're going to love it when it's trading below 200. But it's just a question of, how long is it going to take us to get through our major issues that we're talking about, right? Our geopolitical issues. We continue to talk about the Fed and interest rates and what's going on with tariffs. A lot of uncertainty surrounding all three of these items here, which are all very key and critical to our economic cycles. So it's going to take a little time. We're going to have a little bit of pain going on here. We need some patience to get through this, but in time we will see this market shift back up again.
It appears we're going to get more clarity on tariffs on April 2nd. The president sticking to his prediction that he'll be able to update or unveil the latest duties on that date. Do you think the market could tend to go sideways right until April 2nd?
I think we have it there till April 2nd and thereafter, because keep in mind, right, the whole tariff concept, we don't know exactly how it's going to play out. A lot of trickle down to this, right? And where does that trickle down stop? Does it stop at the manufacturer, the distributor, or does it trickle all the way down to the consumer, to you and me, right? So these announcements that come out will give some clarity to the plan, to the program, but how it actually unfolds, I think that's what's going to take some time to really see if this plan, if there are benefits or negatives to it, but that will take time. But again, the more information we get, the better clarity we get to these situations. The market loves information, right? It loves some sort of clarity. So when we get to the point where we get announcements, this is what the plan is, this is how they're going to implement it, then I think we can kind of figure out how eventually we think it's going to play out. But once we get down to the real nuts and bolts of it, that's going to take some time for us to get there, which I think is going to add this uncertainty to our markets, kind of the activity that we've seen for the past few weeks.
Nike disappointing the market again today. Maybe we could put up a 10-year chart. There seems to be a fear that they've lost touch with the consumer in the sense that they're not on top of the hottest trends at the moment.
I mean, you look at Nike, they're coming off a strong quarter, and as historically they should have coming out of the holiday season, but Nike's not immune to any of the tariff conversations that are out there. The outlook moving forward, and this is a common theme that we're hearing in all the earnings reports, of the uncertainty of tariffs and the implications of that. And again, all expectations are that tariffs associated with Nike and apparel is going to trickle down to the consumer. So I think the outlook there is not as rosy as it's been before in the past. If you look from a stock level there, trading sub 70, those aren't levels that we haven't seen since post-COVID. So again, you could tie this back to the conversation we had about tech. If you look at a long-term long-term chart of Nike and the levels that it's trading at now, at some point it's going to be very appetizing for investors.
And FedEx just keeps coming out with disappointing news, although we had one analyst who said today the whole transport sector is under pressure.
Yeah, significantly. They've, Nike, FedEx missed on the top line, beat on the bottom line. They've lost their biggest contract with the United States Postal Service. Going to be very hard to replace that one. They're the biggest gorilla in the room there, next to Amazon, and Amazon has figured out their way of doing it in-house themselves. So it's going to be hard to replace that revenue that's there. And then again, you think of FedEx as a transportation, distribution company, but think of all of their customers, right? And if tariffs are impacting all of their customers, are their customer sales down? Are their shipments down? So FedEx is not immune to any of this, just because they have so many different clients in so many different sectors that are going to be impacted by tariffs. So I think wisely so, their outlook remains very uncertain.
Thank you very much, Jonathan. It's great to have you on the show, and have a wonderful weekend.
Thank you, Andrew. Best to you.
Jonathan.